Good morning, everybody. It's Friday, March 15th, 5:29 a.m. Central Time. Grain markets mixed this morning, pretty quiet. Matt Bennett is joining us. Let's start off with this soybean sell-off yesterday.
Soybean futures posted a downside reversal on Thursday. The most heavily traded May 24 contract traded sharply higher early in yesterday's session, peaking near 12.17 per bushel. This was the highest trade for the contract since early February. Selling pressure later emerged prior to a daily lower close. Yesterday's export sales report was mostly disappointing. Traders continue to debate the size of Brazil's soybean crop given the big USDA versus CONAB disparity.
Looked awfully good early yesterday, Matt, up to 12.17. That was the first time we had been above $12 since, I believe, early February. So you're talking 5 or 6 weeks. Got a little overbought on the charts. We saw a pullback. We saw some selling pressure emerge. You think this is hedge pressure? Is it just the funds not ready to cover their shorts yet? What are your thoughts?
I think it's a little bit of both. I mean, I wasn't surprised, with the things McKinsey's talking about, for instance, export sales, of course. You're not just going to expect a whole lot there in the way of sales. I think whenever I go back and I look at last week's, USDA report, seeing that they dropped, world stocks from last year, beginning stocks, made some adjustments there. If I go ahead and I take some of these Brazil stocks away, it explains some of the strength here lately. I don't think that the rally's over with. I think that, there's still short covering to be done. I'm not super bullish by any means, but we do have guys on our team. Of course, you talked to Brian on Wednesday that are looking at this a little bit differently, maybe than some folks. I don't know if I'm quite as bullish as Brian. He thinks we can go back and fill those gaps on July, maybe even May beans, and maybe you do, maybe you don't. Of course, that's going to be a run back towards 13, but for right now, I think that it's probably a little bit of exhaustion. I don't know that funds want to get whole hog into this just yet.
Looking at the chart here, if you guys are not watching, there's a gap at about, it's like just north of $13, and that would also mark the 62% retracement of the big break from the November high down to the February low. So there's some things from on the technical front that look a little bit better. Fundamentally, I think we've still got some issues, but sometimes the charts lead the way. What's it up next here?
USDA released weekly drought monitor data yesterday. Temperatures were above normal throughout the Corn Belt last week. Rainfall across northern Illinois, northwest Ohio, southeast Indiana, southwest Michigan, and southwest Missouri led to improved drought conditions. Meanwhile, drought conditions expanded in central and southern Minnesota, northern Iowa, and northwest Missouri. The majority of the High Plains also saw above average temperatures. Drought conditions across the region were mostly unchanged for the week, except for conditions improving in southwest Nebraska. When we look at the percentage of U.S. areas experiencing drought, corn country 36%, soybeans 33%, winter wheat 14%, spring wheat 30%, and cattle country 18%.
Matt, you're in Des Moines this morning. There's a lot of concern in the state of Iowa in particular regarding drought. What are you hearing from people?
That they don't want to sell anything ahead of time or sell any old crop corn because they're way too dry. And they're also talking about Elwin Taylor's 89-year drought. And I'm not throwing shade at that. It's something that's talked about. I'm hearing a lot of folks that are saying it affects them and their comfort level with going ahead and making sales. And it's not everyone. We've been talking quite a bit about maybe using some of this to layer in some risk management as you continue to move higher. If you do have drought conditions persist, and things tough for most people, Joe, of course, is that any farmer you talk to is going to say, I want to plant in dry conditions. That they just that works better to plant into dry conditions in the spring. You want to have some subsoil moisture though, so as you've got a little bit of support if you don't get quite what you want for summer rainfall. So, I've been in 3 different places this week in the northeast part of the state. Some of those guys said they had really good crops, but then some of them said, hey, it wasn't quite as good as what I was hoping for, and I'm still concerned with subsoil moisture. So I think that's their biggest concern. Are they going to have enough reserves if they're dry again in places this year? Because it surely doesn't look good right now compared to everyone else.
For the moment, it appears to be a marketing issue when you talk to farmers. This is not a market issue because the market does not care about this right now and probably won't for another couple of months. We talked about this, I think, when you were on either last week or 2 weeks ago, and I said something about, it might maybe mean quicker corn planting and maybe more corn acres. And I think after we stopped taping, you're like, Joe, there's a lot of guys that are planting soybeans first now. Talk
Hmm.
to me about that a little bit.
Absolutely, Joe. So actually, there was beans planted in my county this week.
Really?
Yeah, so a customer of mine had a 40-acre river bottom that he said, you know what, it's so dry, even the river bottom is that dry. And typically, if you have, like, for instance, beans frosted off, they're going to be a little bit protected down in that river bottom. So, yeah, bottom line is that most of your university guys have been telling us, most of your agronomic folks have been saying, if you plant beans first, it's probably going to work out a little bit better for you. If you can get them flowering by the summer solstice, so it's, I believe, like the 22nd, 23rd of June, when you have your maximum sunlight date for the year, typically it improves yields. And it certainly improved our yields on our farm whenever we started trying to plant beans as early as what we could. Now, obviously, you've got this insurance date to deal with for a lot of folks. There is the chance to buy the ability to plant either corn or beans 2 weeks earlier if you go ahead and pay in places a buck, $2, I don't know, 250. I've heard all kinds of different things, but I believe that if conditions stay similar to where they're at right now, there'll be a lot of beans planted before we ever see April 1st.
We mentioned Iowa as an example, but that is not the only place that's dry. Maybe that area of, say, north, would be northeastern Iowa is maybe the worst. You go east of the Mississippi River, and there's not nearly as much, but Minnesota's turned very dry. A lot of Wisconsin's very dry. A lot of Missouri, Kansas, Nebraska, up into North Dakota's dry. So there are a lot of pockets that could use some rain, certainly.
Russia's grain production is forecast to rise next season. According to Russia's agricultural consultancy ICAR, the country's 24-25 grain production is estimated to reach 147 million tons. Of that total, 93 million tons are slated to be wheat. Next season's grain production estimate is up 2.1% from this season's forecast. Next season's wheat production estimate is also higher than this season's projections, up 1.5%.
This is like something along the lines of like a USDA outlook form because this crop hasn't been planted yet, but they're talking big numbers. This year, Russia will be the world's fourth largest wheat producer, or was, and it's a big deal. They have been flooding the global market with cheap wheat, is kind of the talk, Matt, and this has really kept a lid on price action.
Oh, absolutely. I think whenever you look at, for instance, the world as a whole, and I know that I've probably talked about this on here before, or the US, typically in the past, you've seen stocks to usage ratios 50% or more for both. And you've kind of weaned yourself away from those types of numbers. And so,
Yeah.
whenever you see stocks to use globally right now, that's quite a bit lower than what it's been in the past, you'd think, hey, price action isn't going to look too bad. And then you've got these jackwagons over here dumping cheap wheat on the world market. Now, that's their right; they can do it. But what it's done, most certainly, is keep a lid on prices, just like you said, and it's made it pretty tough for this wheat market to take off and get any traction.
It's been a long time since we've seen a material rally in the wheat market. It's really struggled. We've also got some demand problems, which is our next story.
China has canceled and postponed Australian wheat purchases. About 1 million tons of wheat were either canceled or postponed until the second or third quarter of this year. The changes come just weeks after China canceled more than 500,000 tons of U.S. wheat purchases. Following crop damage from unfavorable weather last year, China ramped up its wheat imports. Purchases were mostly made in Australia, the U.S., France, and Canada. Since then, as we just talked about, Russia has flooded the market with cheap wheat, which has depressed global prices. There is a strong likelihood that China made the cancellations to buy wheat at a cheaper rate.
Yesterday, I made a horrible, horrible joke. I called China a serial canceller, and either nobody got it or it was so bad that just nobody gave a shit. Anyways, so China's canceling wheat all over the place, or they're kicking the can down the road in terms of shipments, and none of this is helpful.
No, it's not helpful whatsoever. And you've got to think that if they're canceling this wheat, where are they going to go to get wheat? I mean, I feel pretty confident that they're going to get wheat from Russia. And so, but yeah, it's not helping anything. But I think over the long haul, like I said, you're going to whittle down your wheat stocks and stocks to use globally a little bit more than what we've seen in quite some time. And I don't know. I think Russia or China at some point in here, Joe, is going to get back into a stocks building type scenario. I don't know if it's right now. I don't know if it's this year, but with cheap commodity prices, when they feel like it's going to be the best bargain, I feel like they're going to step in and stocks build. I don't think they've got near as much on hand as what USDA is indicating. And I'm not saying USDA is cooking the books. I'm just saying that it hasn't felt that way to me over the last 2 or 3 years, that China's got as much on hand as what they've said, at least quality. And so I feel confident that they're going to be stocks building at some point. I said, no when.
There was a story that Reuters printed yesterday. I don't have it here, but USDA is kind of changing the way that they measure Chinese imports. They used to use like Chinese customs data almost exclusively, and now they're starting to use shipping data because they feel like the customs data is not reliable. I don't know exactly what that means, but it could be something to talk about as we move forward.
U.S. corn export sales improved last week. Net corn sales of 51 million bushels were up 16% from the previous week and up 19% from the prior 4-week average. Japan was the largest corn buyer for the week. Net soybean sales of 14 million bushels were down 39% from the previous week, but up 55% from the prior 4-week average. China was the largest buyer for the week. Net wheat sales were below pre-report estimates at 3 million bushels, a marketing year low, and down 69% from the previous week and down 71% from the prior 4-week average. Mexico was the largest wheat buyer for the week.
China was a very small buyer of U.S. corn, 133,000, but 65 of it was switched from unknown destination. So maybe that's like your one cargo out of the PNW that was actually reported. Soybeans were absolutely terrible. And again, this has been a trend and a very bad trend. We're seeing these cancellations, unknown destinations cancel 311,000 metric tons of soybeans. And that's something that we've seen like every week for the last 3 or 4 weeks. I don't know if that's China or whoever, but it's probably because Brazil's $1 cheaper than we are on the export market. And then wheat sales were absolutely terrible, but we knew that that was going to happen because of these Chinese cancellations. The export market, maybe with the exception of corn, still kind of struggles here.
Yeah, I believe so. I think when you look at, for instance, we look at this agri-census site, and they've got some pretty good data on FOB values per metric ton. And, we're 30, $35 above Argentina and Brazil at this stage of the game whenever you're looking at soybeans. But with corn, we're actually quite competitive. And so, as you say, corn may be the only bright spot. I've said all winter, and I've been saying, especially here the last couple, 3 weeks, if we have issues with the safrinha crop continue to linger as far as weather's concerned, I think actually corn exports could be a pleasant surprise between now and the end of the marketing year. Now, I'm not saying we're going to get crazy and sell a ton of corn, but I do think we could actually eclipse, what the USDA has projected. Of course, that's going to be heavily dependent upon what Brazil does.
We did Brazil weather yesterday, and it is dry in a few areas. It's just too early for the market to be concerned. So they're wrapping up planting of the second corn crop, and you're going to need to fast forward like 3 or 4 weeks before the dryness becomes an issue or something that the market cares about. But it's something that is lingering and could absolutely become a concern.
USDA reported a flash sale of corn on Thursday. U.S. exporters sold 4 million bushels of corn to Mexico for delivery during the current marketing year. This is the 4th flash sale of corn to Mexico since the beginning of the year, totaling 33 million bushels.
As it relates to corn export sales out of the U.S., Mexico has been head and shoulders above everybody else when it comes to commitments. They have been our best friend here and most reliable buyer since China has just stepped away after 3 years of big purchases. There's still chatter about the GMO thing, and that does not relate to feed grains. What that relates to is like corn for human consumption. So Mexico has been a great friend of the corn export program.
Yeah, you couldn't have stated that any better. I mean, it saved us this year.
Yeah, absolutely.
Almost on a weekly basis. It's basically been our only friend at times, and so you've got to hope that that trend continues. If we could get some additional surprise business, like I've said, it would certainly be a little bit of icing on the cake. But absolutely, that relationship, people have to understand. We have the infrastructure in place to ship corn to Mexico, to where it's tough for them to go somewhere else in a cheap manner. They're used to doing business with us. They know the quality. It's a good relationship, and so hopefully that continues for a long time.
All right, we had some inflation news yesterday.
So, inflation at the wholesale level increased significantly last month. The February producer price index rose 0.6% compared to the prior month, up from a 0.3% increase in January and the largest increase since August. On an annual basis, wholesale prices gained 1.6%, up from 1% in January and the largest increase since September. The increase was largely due to energy prices rising by 4.4%. Food prices also increased last month, gaining 1%. February's increase in both consumer and wholesale prices suggests that inflation is far from under control. The Federal Reserve will meet next week and is likely to hold its benchmark rate steady.
I did the same thing today with the PPI charts that I did with the CPI charts earlier this week. So inflation progress has largely stalled. Yeah, the rate of inflation has slowed on the wholesale side to 1.6%. It was almost 12% March of 2022. But when you look at the index itself, it's at all-time highs. So again, this is at the wholesale level, but if it feels like everything is as expensive as it's ever been, it is. And this is government data, and a lot of people think that the government is understating inflation. They've got PPI up 21% since February of 2020, which is your last pre-COVID month, and CPI up 20% during that same period. I feel like it's probably more than that, but this inflation is sticky, Matthew.
Yeah, it is. All you got to do is go to the grocery store, right? I mean, all you got to do is to do anything right now, quite frankly, and it's expensive to do it. And so, we've actually traveled some together. I brought Tiff and the kids along here actually for an extended spring break type situation. And, whenever I'm traveling with one, it's a little bit different than traveling with four, even two little kids. But bottom line, no matter what you do right now, it's expensive. Go to the grocery store, you're going to rack up a heck of a lot bigger bill than what you've ever seen. So, yes, inflation, the rate of it is slowed, but things are still more. I mean, it still costs you more to do the things that you want to do than what it did, just 3 months ago. And that trend continues. And I'm not so sure that it should be a major surprise. We printed money, printed money, printed money. At some point, some of what we've done is going to catch up with us. I'm a little bit concerned about it in the long run, but regardless, we've got what we've got.
Okay, nobody is telling you, there's nobody out there telling you this chart right here that it's ever going to start trending lower. That'll never happen. Things always get more expensive over time. It's just that the upward trajectory is kind of scary. And the fact that the Fed is still in all likelihood going to cut rates, there's an 80% chance that we see a cut by July, if not in June. I mean, that may exaggerate the inflation situation. I don't know. It's
Yeah,
kind of scary.
absolutely. But you're going to get the rate cut. They've said that you're going to get a rate cut, and it is an election year, so you're going to get a rate cut. I mean, that's all there is to it. And I don't think that that's going to help anything.
No, should make it worse. And I don't know if anybody here watching in terms of like operating lines, I don't know if they're going to see the relief this year. It might be a 2025 thing. Cattle got beat up yesterday.
They sure did. Feeders closed anywhere from 280 lower to 467 lower. Live cattle closed between 185 lower to 297 lower. Box beef continues to climb higher. Choice ended the day at 310.78. That was up 96 cents. Select ended the day at 301.69. That was up 65 cents.
Matt, are you a cattle bear or a bull?
I'm a
We're
little more.
undecided.
I'm in the cautious camp right now. What I've told guys is as you approached, for instance, on April, this 190 level, anybody close to terminal, if you don't have some protection, I mean, good night. This has been quite a rally off of the lows that we saw. And so I would say I'm more of a cautious tone. I think longer term, you definitely have an opportunity to make new highs, all-time highs, and eclipse this 199.60 or whatever we got up to later on in the year. I don't think the time's now, though.
All right, so Matt is bearish and bullish for the record.
Correct.
Outside markets on Friday, U.S. dollars flat, stocks are up a little bit, bonds are up a little bit. Crude oil is down 56 cents, and the May WTI at 80.18 last trade. Have a great weekend, everybody. We'll talk to you on Monday.